The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 22nd day of December, almost wrapping up the year. Amazing how quickly years go by. And thank you for a good few hours. You got John and Steve there. Got Larry Pesavento coming up. Just great programming as always right here at TFNN.com. Don't forget, you can go to the front page of TFNN. Just click on any one of those icons. It'll recognize what device you have, and it'll give you the charts live. Right now, you're looking at the E-mini. This is the S&P March contract of the E-mini, which broke out from 1961.50, the low of, remember, it was October the 15th for the first low, and then we've got December the 16th for the second low. Let me just put that in so I don't have to keep looking to see. December the 16th at 1961.50. Whoosh! Friday, it goes all the way to 2,071.75, 2,076.25, and we're having a little bit of a consolidation. I would not be surprised if we have a little consolidation between today and tomorrow. I'm looking at this breakout to all-time highs as changing the weekly pattern. I've been talking about this for a long time, and what I've been saying is that 1805 round number low that was made on October the 15th, from my work, unless I'm really miscalculating something, there's just a very good chance that this is now leg B in a brand new buy signal to the weekly chart. Now, I can't really call it anything right now in terms of buy signal to buy mode or anything like that in the week. All I can say is, because this is just the very first day of the new trading session of the week, we haven't made a new recovery high. So far this is called leg B with a potential peak B if we don't go above 2,076.75 in the future contract. That's the weekly. But look at the weekly. This is what I spent some time on during the weekend, sending charts out to my subscribers to my opening call. And the reason why on Thursday and Friday we had no choice but to switch from the short side to the long side. And as I'm looking at it, I believe that it's going to be a tough call, but my thinking a tough call right at this particular moment, because we're on the cusp of testing that inside track resistance area. Everything about what I did over the weekend said that there should be a rotation. I spent some time on the IBB, the NASDAQ biotech sector. Did I know that there would be a turnaround today? No, we were short. We had to cover that short for a small loss. But you know what? Everything that I did said, unlike some of the other charts, the IBB is the one that's going to be very important. So let me go step by step. The E-mini that we're looking at shows that the stochastic, although it's declining, is still at 88%. That is very good. The MACD deflected back up again in that M pattern. Very nice. It is way above the 9-period moving average of 2,032 at 2,069 right now, up only 2. It was up a little more earlier this morning at 2,075 round number high. But the high was 2,076.25 made on Friday. Now let's do this. When I'm looking at this particular pattern, having gone from a low bar, having hit that up channel support level, to the inside track dashed line, that's the start of the repellent zone, going all the way this week to 2,100. That's 30 points, 300 down points from here on the upside. I'm suspecting that the big move was made, needs to digest some of the gains, and that if I look at three sectors, they're going to give me a tremendous amount of, make it 4 sectors. That's transports, biotechs, semiconductors, and financials. So let's just go one step at a time. So far, this particular chart is very positive on the E-mini on the weekly chart. The daily chart is a spectacular single leg A to the upside. If any pullback this week, and what I've been saying for my subscribers, I always do the 120-minute chart of the E-mini, and I do the daily of the E-mini, and I don't give a particular trade, but I do give the exact parameters to look for. And in this case, what I said is that 2061 to 2059, 57-ish area, that should be support in the shorter term. In the and the upside is limited to 2076 to 2079, at least for now. Maybe 2081 a little later in the week, but shortened week and shortened day on Wednesday. Let's go through this and look at the 120-minute chart. That pattern I'm looking at here says that this could be a G, it could be a C1, C2, or there could be a nominal new high to D, and then I think we pull back. So whatever case I'm making for it right now on the very short term, I'm saying that the upside, short term, remember, that's today into early tomorrow morning, seems to be somewhat limited. I said the same thing I said applied to the Dow with my Dow chart right here that I'd shown to subscribers. There's that inside track Chapman wave, inside wedge. Support resistance level, and here's the left side, right side price time match, which says that roundabout by the 23rd to 24th, that's today or Wednesday, there should be at least an attempt to get into the 17,000, let's see, 17,009. 50s, maybe not hit the 17,991 all-time high just yet. Might need a little bit more work. But a deflection to the downside, sharply below 17,690, a close below that, would say, hey, be careful here. You could start to deflect around this point from this MACD, and that would be a negative, especially if at any point this week 17,500 in the Dow is taken out. So let's get back to our story. What I said, that I'd go through the numbers, and here are the numbers. You've got the Dow up 69 at 17,874. You've got the S&P down a point at 2,069. A bit of a divergence there. I wonder if I can see that. I won't look at it now. I was going to see which stocks are acting well in the Dow, but we'll leave that for the moment. You've got the comp index, UNCH, at 4765. Now, the QQQ series, which is the NDX 100 trading vehicle, look at this. It has failed to take out the 106.25 high. It stopped kind of dead right here at the resistance level. Let me just check that out. Okay, so that's going to have to be a message for me. And that's the resistance to take out. So the QQQ, which is kind of biased a little bit with the biotechs, needs to see 104.90 to 105.20 taken out within the next 2 days. Otherwise, it's going to stall. And that will give us this rotation. This is going to be very important. Why? Because within the rotation itself, what we're looking at here is the biotechs. Now I can go to the biotechs, IBB, down at 306. Now I spent a lot of time this weekend. I gave the charts. I also did the 120-minute chart. I just showed the whole panoply of indicators here. And what I said was that there was nothing negative yet about the weekly chart, and the stochastic at 91, 92%. The MACD is still good. The weekly chart, the monthly chart, I said I can't even talk about that now. It's great, but I have to wait until the last day of the last day of the year, the last day of the month, last day of this particular chart pattern. And then there's a possible E/A in the daily chart, and if the MACD deflects lower, especially since the stochastic was down in the 60s rather than the 80s, that says there could be a deflection, and it would just have to be, I even said it, an out-of-the-blue situation that would take the would take the IBB down. Now we've got it because Scripps, Express Scripts, that said that they're going to not use Gilead or whatever it is, their particular drug of choice. It's not the drug of choice for ESRX, and they've got some others as well. So this says to me, finally we're getting, I thought it could be interest rates. It could be, I don't know what it could be. It couldn't be really interest rates, because interest rates would have to really skyrocket to impact the biotechs, because they use a lot of money for loans, etc. It had to be something else. Who knew that ESRX trading at 81.99 up $1.02 after making a peak G slash C in the daily and a C in the weekly would be pulling back like this. So it's going to be very interesting. Does it impact the Qs? Are we getting an isolated move here that could take stocks like the cyclical stocks and the Dow type stocks higher? Well, let's look at the XLF. The financials are holding nice. They also didn't make a new recovery high, but their weekly chart is showing nice strength. Monthly chart is nicely above the 20-period move, 200-period moving average. And this is the S&P Select Financial Spider. And the 120-minute chart has gone to the peak A. I believe this is still an A. Let me go. 2481, 2481, 81. Yep, it's still A. With a little potential double top of the 120-minute chart, but a lot of support is at 24.72, up 4 cents. A lot of support at 24.40s. Yeah, in 24.40s, if it even gets there. I like the way the XLF is acting right now. We haven't gone back into the financials. We might do that. We've got some other stocks that are actually doing, whoa, we are doing really well. One is up just 3.5% today alone. Another one is up. It was up. Yeah, it's up. It's unchanged now, but it's up a few points from where we bought it. And a new one that we bought just on Friday is, I don't even know what it is. Where can I find it? Is it there? Let me see. Let me just type that in over here and see what it's doing. Oh, up 14% today alone. It's up about 20% since we bought it on Friday. So we're looking at the long side, and believe me, it's very specific. I'm not into the long of the indices just yet. It's just specific stocks that I think are under the radar. They're just the stocks that might hopefully be beneficiaries. So let's go on. Gold is down 10. I just don't see. I'm sorry. I don't see. As long as the dollar is rallying, that's just going to be a terrible, terrible drag on the dollars. I have to call this an alternate wave C. I'm not sure actually what else I could call it other than C right now. And the dollar's acting really well. Euro is taking the same side as gold. Yeah, it's trying to find some support here. It's actually looking a little better today than gold because it's trying to rally. And the USD JPY has to be up because the dollar's up. And it is, it is up at 119.91, up 0.47. Very nice. So, and high-grade copper is not doing anything. It's just stuck here. Not such great news. So let me just do this. This is a very good time to be very specific. I'm trying to be very specific for my subscribers. I know that it's a little frustrating, switching back and forth and back and forth. Believe me, you need a little flexibility. I'm trying my very best not to be tied to one side, long or short, at this particular point. My bias is to the long side because of that breakout. My bias because the Fed, if Yellen is blowing air to buoy the sail of the sailing boat so that it can move forward, I do not want to get in the way. I don't want to create any turbulence whatsoever. Basil Chapman, Tiger Techniques Hour. We'll be right back at 877-937-6648. Dow's up 81, S&P's up 20 cents. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I should mention, while I was, my wife and I were in New York Friday and Saturday, we happened to go to the memorial, to 9/11 memorial. And it's just a very heavy, I'd say it's a very heavy exhibition in terms of just, for those of us actually saw it happening on TV, it's just to bring back all those memories and to think of those things. I always believe so strongly that it's what we don't know that must have been extraordinary. Can you imagine the firemen walking up the stairs when everybody's walking down the stairs? They know that they're going up the stairs with a really good chance of not coming down. People going down the stairs didn't even know if they'd make it. So it was really quite a heart-wrenching thing. But I'm not trying to be morbid or anything, but I really feel very strongly. I didn't see a single thing I just did not see anything about the people that jumped out the windows, and I just think that it's you gotta state the way it is and the way it was. That was the desperation. Can you imagine, and what it meant? So, but it was an extraordinary exhibition. But another thing is, I'm not sure that I felt that good about people paying. It was quite high, actually, to get in, to have a look around. But there were hundreds and hundreds of people getting in. But it seems to me something like that you shouldn't have to pay for. But anyway, those are my feelings. But what an extraordinary museum. So with that said, let's just get right on, because I do want to get on to our callers, and we've got, if I can just check it out, we've got Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good. How are you doing today?
I'm doing well, thank you. You'd like to look at?
GoPro and Cuba. I listened to your show 4 days ago, and I got some Cuba.
I meant to look at. Pain. I didn't get Cuba. I thought that was it. I thought we pulled back a little bit, and I never got it. Oh, Cuba's at 13.94. Cuba is having a renaissance. Very good. What price did you pay? Were you in the 11s or 12s?
I paid like 8 or 9. I forgot.
Oh, you got it way back on the day we were talking. Oh, that's fantastic, folks. Cuba is at 14.10 right now. So, okay, you're playing, and I have to say playing because we can't really call it an investment in the sense that this is
holiday trading. It's light trading. It's holiday trading.
It's not just that. It's by the time it's really implemented and you see the benefits in Cuba, I think it's going to be quite a while. So right. You're playing a trend that is an emotional trend, but boy, this is great, and it really does look like it should go in the daily chart to a leg C. I'm not sure yet about D because this is an extraordinary move going from the under 7 to 14 to double in just 5 days. So this is what I'm going to recommend. Take one part of your position and make the stop. I would not take a loss on this under any circumstances for 2 reasons. One is, if it does drop below your price, it's going to take a little while before it regenerates that kind of energy. I don't think it's going to, not just yet, not until maybe January. So in that sense, I think that's good, but I definitely would not take a loss. Number 2 is, I would absolutely take one part of that and say, this is an extraordinary reward for something that I picked up just the moment of news-related recognition, but not general public recognition. You still have to get that. It's just coming in now. So I'm suspecting that this thing could go to $14.50, $15.75, somewhere in that area. Whether it does it now or a little later, I'm not sure. This is what I'm going to recommend. Take one part of your position. You have 2 choices. One is at $13.83. That is an extraordinary gain. If you want to take even a little bit off, I'm going to say to you, I would sanction that just in terms of money management. There are some people that would do the exact opposite. This is where they'd be piling and saying, hey, this thing's going to 18 or 20, and they double up and they double up, and they could be great and they could do enough in 2 weeks to retire. I don't want to do that for the simple reason that this is not a game. This is real stuff. It's real money. So I'm going to say to you, you've got a fantastic gain. I would take at least a tiny bit write-off now. That's 2 separate things. One is to say, I want to reward myself. This is money management. The 120-minute chart is in leg D, leg A, B, leg C, so you should still go a little higher. So you could either put in it, we've got a break coming up. So either at 13.60 or for 19-20 cents, can you hold on a little bit?
Sure.
Okay, we'll be right back. We'll be back with Mike and Painter looking at Cuba. This is the Hertzfeld Caribbean Basin Fund, and it's fantastic, looking great. I'll be right back straight off these messages down.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and so we're with Mike. Mike, so tell me something. Was this just a trade as far as you were concerned? Just kind of buy it, let's see where it goes, and then we'll deal with it? Is that kind of the way you're looking at it?
I looked at the chart for a few years, and I took where we were, and then I subtracted the low point, and I figured it's going to go up about $4. So I sold half at $12.20, and
okay. I'm pleased I asked you. Good. Okay. Congratulations. That's very nice trade. Okay. So that's a different spectrum. Now you've already taken profits. So now I can look at it differently, and I'll tell you why.
Well, it looks real overcooked right now.
I'm saying what?
It looks overcooked right now, overdone.
Yeah, I mean, just on a very short-term basis, I mean, to see this kind of move. But don't forget, what you've got here is pent-up emotion. And Hertzfield Caribbean Basin Fund, CUBA, Cuba, there's a high of $15 that was hit twice back in August of 2007 in the monthly chart, and September of 2007. Double top, and then it made what I call a Chapman wave right shoulder failure pattern. That's the H pattern, but from the top, and it plummets down and goes all the way down from the high that it made back in January of 2007 of round number 18. It goes all the way down to 3.11. So this is a whopping move, but it's been steadily building up. And for my newsletter, at some point, I can't remember whether we either had it or said at any point we're going to have the administration announce better relationship with Cuba, and this thing's going to soar. But did I want to hold it from $8.50 down to $6.38? There are a couple of stocks maybe that's what I'll do for January, or maybe even sooner. Maybe what I'll do is I'll start a little, what I'll call a fund, a future fund, and it'll have some of those stocks that I really think are going to do very well in 2011. But you could be early and you could see a 20% decline, but the gain would be either a 50 or a double. Maybe that's where I'll have to think of it just as a kind of a, not a fun section, but a different section in my newsletter. Anyway, so back to our story. The 120-minute chart looks like at any moment this week, today, in fact, it should have one pop about 1410. If it makes a peak C here with no new high over the next 2-hour bar, and then makes it later today or tomorrow, that's when I think we get our pullback. Now, where would it pull back to? There's going to be buying. There are a lot of people that are just waking up to this right now. So my suspicion between 1230 and 1170, that's where there's going to be further buying. So that's the reason why I was saying, right, yeah, as we're speaking in the 1360s, it would be wise to take at least something off. Now, you've already taken off a little more than I expected, but there's nothing wrong with that, but I didn't know at the time. So this is what I'm going to suggest, that maybe you've done now, you're done now with the taking off. What you might want to do is to be thinking about putting back on, but I would only put back a quarter of the half that you took off. Why? Right. Because I'd rather have it form a base in the 1220 to 1170 area with a tightish stop of about 1150 on that second 1/4 position. And then if it starts to rally, I would add back that, and you're still in it, but you haven't been taken out of that second quarter. The moment it goes, let's just say the high is not 1410, but it makes leg D at 1414, and then it pulls back. Whatever is the high of peak B, if it goes 1 penny above it, you can add that second quarter back right there, and that would be a trading quarter. And what I would do is have a trading stop, because that one should take you towards the 1470, $15 left side target area. And then once at 15, I would either raise my stop or take my profits on that quarter position. And that quarter position you might put back again later. So now you're having fun with it. You got a quarter, you got a half position, core position. You got a quarter position, a half position that you've pulled back. Now you've put back a quarter. You got 1 quarter left. That's your playing. That's really what I call playing money, because that's testing your technique. It's testing a whole bunch of things, and that could all fail completely at some point. But that's how I would manage risk. But first of all, congratulations, great entry point, and a great confidence that you were able to take off half and stay half.
Yeah. Thanks for mentioning on your show. I'm also looking at GoPro. I just got 3 calls this morning on that.
You know, I'm having a tougher time with GoPro. There was one, I can't even remember now if we actually got in to GoPro, but if we did get in, it was just a very brief period. I'm having a trouble with it. One of the reasons why I was reminded of what we did on Friday, was it? Mm-hmm. Saturday, I don't remember, to go to the memorial. I think it was Friday afternoon, was because my wife said, hey, well, what is that camera? Why is that guy wearing a camera? It says GoPro. So I said, oh, yeah, it's the latest thing. And here I am looking at the stock, and it is dead. It is just looking miserable. If ever there was an opportunity for GoPro to go, it is just not doing it. This has failed miserably, and I keep getting asked by subscribers, hey, when you're putting GoPro back, I don't see anything here. So you got calls. Here's my recommendation. I would not give the calls any room. Now, I realize it's limited funds. Whatever you lose is just the amount that you put in. And is it January that you've got?
Yeah, 2 weeks out from now. I got the $60 calls for, I think it's 2 or 3 weeks. I got to help check.
Yeah, so I don't think you're going to lose much premium unless it starts to take a dive here, which I think it could. So here's the way I'm going to ask you to think about it. If GoPro by this afternoon, this is, what, 2 shopping days, 3 shopping, what is it, 2.5 shopping days left for Christmas. If ever there was a time for buying it, it should have been it should have been at 95. It shouldn't be at 56. So I'm going to make the suggestion that if by this afternoon it hasn't moved, I would not hold the 3 calls. I'd make it 2 or 1 And if it starts to move, I would add on strength. I would not add on weakness.
The lockup is tomorrow. And they're adding more shares or something too tomorrow.
Then I don't know if I'd even be in it. Because
well, I figured as a contrarian move, I would the way it's been acting. I've seen these lockups before, and the layer of the lockup, all of a sudden the market makers support the stock, and they squeeze the shorts. So
especially if it's been going down beforehand.
Right.
Okay, so then you've got a strategy. I'm not going to change your strategy. All I'm going to say to you is that you still have quite a bit of premium in it.
Right.
That premium obviously will shrink come the first week of January, and at this point they'll try to keep the premium there a little longer, but I've got a target of 46, the 200-period exponential moving average, come January or February. So we'll see what happens.
Okay.
Okay, hey, but great call on Cuba. Thank you for calling. That was Mike and Benson. Now let's do a couple of things. I promised in the den they wanted to look at IYT. I never got to IYT. IYT is the iShares of the transportation index. Nice bounce here. There's a Chapman wave. Yeah, actually, it could be a falling axe, but it's more like a flag pattern that is breaking out to the upside. It should break out as much to the up as it did on the down. That would take it to 164. It's at 162.73 right now. It's up $1.21. FedEx. If ever FedEx has got to move to all-time highs, it's the same thing as the IYT. I think UPS was the one. Whoops, UPS. UPS was at all-time highs. That's a far better chart. So if you're looking at anything to buy at this particular point now, I suspect this is part of the XAL, which is XAL is the iShares of XAL is the ARCA airline index, trying to make a double top at 100.84. It's at 99.29. You know what? I'm going to do a lot of reassessing. I have to go back to New York. I'll be doing this afternoon, so I won't be doing my show tomorrow at 11. I hope to be able to do my interview with Tom in the afternoon. But I'll be back on Wednesday. Well, I won't be back, but I'll be doing my show on Wednesday. So I'm going to take that time while I have it this evening to try to do some work to see if the selectivity. I mean, for instance, to me, it's a shock. I just looked a few moments ago. 2 out of the 3 stocks that we have on the long side, and these will range from stocks in the 130 area to under $1. Are up 26%, 22 to 26%. Just in just like one is from Friday, one is from I think Thursday, maybe, I'm not sure. Just very quickly, that is unusual, but it's saying to me that I might be right in suggesting that it isn't so much indexes that we're looking at right now, but the rotation into other stocks and perhaps the cyclical area, perhaps the economically delayed, the ones that didn't move earlier, that are based really very much on the economy, but they are starting to be recognized now as moving. And in that particular instance, we might be also looking at selectivity within sectors. So I think this is an extremely selective move, and if I'm correct that it's a selective move, then when this weekly chart is completed, whatever it's going, look at the SPX.X. Oops, I missed it. Yeah, SPX.X. Weekly chart has not made a new recovery high. It has not gone above 2,079.47. The E-minis did, the futures did. The Dow, INDU, has made a also an alternate wave count here, either B, peak B, or F, but the MACD and stochastic are still very good. I suspect this is what I'm thinking. And I had a question about this in one of my subscribers. A subscriber I love because he gives me hell when I'm wrong. And he pats me on the back when I'm right. But this is mostly for the trends, not necessarily stock individual stocks, but for the trends themselves. And I think that's great. I like to get a little bonk on the nose every once in a while just to say, hey, wake up, man. What are you doing? There's nothing wrong in that. It's critiquing is different to criticizing, and I like that. So in this particular instance, what we're looking at, there is nothing wrong in this particular chart pattern that we're looking at in the Dow a weekly chart. I'm not going to do the monthly yet, although the monthly is the larger trend is still very good. Now look at the NYA, and this is something that I really pondered, NYA.X. I pondered over the weekend. It went to 11,107 was the high that was made. Was it 11,108? Oops, I forgot to put that in correctly. 11,108. So here we go. 11,108. Okay. All of it. 11,108. The rally that we just had went to 11,068. And it's got that H pattern that was making me very nervous just the other day, 4 days ago on Tuesday, when I was looking at it and I said, hey, wait a minute. If I'm looking at that pattern that I call an H, an arch formation that fails to take out the previous high, you have to have a spectacular candle to eliminate that negativity. Well, that candle on last week was, for the weekly chart of the New York Stock Exchange, 2,860 stocks. That was a whopper, but it didn't go above the candle high of the previous week of 10,946.40. So this is the week that there is no choice. You have to see a test of that wick high. You've got to get close to 11,000. 10,946 would be good, but really 11,000 is what I want to see on the NYA. That's number one. Number two is, when you're looking at the XMI, I just can't remember if I actually updated it or I glanced at it. XMI, change the symbol, is XMI just straight off. Yeah, now look, that went to a high of 1920.30. I just didn't update. 1920.30. So here we go. 1920.30. And then what does it do? It drops precipitously down to 1731. That's a big move for this index. 200 for the XMI, the ARCA Major Market Index. And then what does it do? It rallies to 1917.68, just like the New York Stock Exchange. This is going to be very important. If there is a new high, that's going to be B and that's going to be C. And I don't actually at this point even know how to count it other than that. Sure, you could fail. It's really unusual for weeklies to fail at a B or a C at all-time highs. It just doesn't happen. Not often. Now, here's the other thing, and this to me goes right back to Mike in Pennington that we were talking about. Look at the RTH. Did it make a new high today? Another new high. 7110 was the Market Vectors Retail ETF high of Friday. And lo and behold, today we go to 7114, 4 cents higher. And I have to tell you, this is a very important moment because the stochastic's at 82%, but the MACD has not crossed positive. If it does cross positive, you could have another whole series of rallies that takes the weekly chart higher. But here again, I've got an alternate count. So I'm looking at this, I'm saying we're coming to the end of the holiday season. My guess has been that in the holiday season, we're going into this particular period, we would have massive, massive selling. But you'd also have massive discounting. And because there's so much competition for the business, that you would find that profits quite aren't there. We'll see. I'll be right back. Dow's up 81.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methods, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. I just got an email saying, this is from Mike. I don't know if it's the same Mike. Cuba is not much Cuba. Traders are like rabid cattle foaming at the mouth. I guess if it's moving, it's moving. The Hersfeld Caribbean Basin Fund's investment objective is long-term capital appreciation. To achieve its objective, the fund invests in issuers that are likely, in the advisor's view, to benefit from economic, political, structural, and technological developments in the countries in the Caribbean Basin, which consists of Cuba, Jamaica, Trinidad, and Tobago. The Bahamas, the Dominican Republic, Barbados, Aruba, Haiti, the Netherlands, Antilles, the Commonwealth of Puerto Rico, Mexico, Honduras, Guatemala, Belize, Costa Rica, Panama, Colombia, and Venezuela. Gee, I wonder how many of those are high-tech companies. The fund invests at least 80% of its total assets in broad range of securities of issuers, including U.S.-based companies that engage in substantial trade with and derive substantial revenue from operations in the Caribbean Basin countries. Right. So, as I said, it was a Caribbean-based fund, or at least it's called the. That's it in its title, Hersfeld, and. This is just an emotional thing. You're trading the emotion of it. At some point, the reality will come to pass, and we'll have something very different. And I think that our caller, Mike, knows that. So, so that's the way we're looking at it. So let's see. Now, so folks, this is what I'm looking at here. When we have when we have a long-term, and the question came up here, and I think it's a great question, and I think over the next 2 to 3 weeks, I'm going to be dealing with it a lot. And that is the long-term. Where are we? What inning are we in? And I suspect we're in the 7th inning, maybe the 8th inning, maybe this, I'm not sure. So it's the very last couple of innings that we're in. In terms of this particular move, if it's the one for the final move, the move that says, okay, skyscrapers are in, this is like 1929, hey, I'll deal with that when the time comes. All I'm saying is that at some point we're going to get a correction with a greater magnitude of anything we've seen. Is it this time? Is it now? I don't think so. Not as long as they can keep rotating into the other sections. You want to see, with a Granville cell signal, you want to see 90 to 95%, if not more, of all stocks go down when you get a sell signal. I'm not there in that camp yet. I just see a rotation that says the Dow could pull back easily 1,500 points at some point. Maybe it's going to be the first week of the third week or so of January, where we make our maybe a leg D, or then a peak D in late January. I'm not sure. That's the thing. Now, I'm just telling you this, that as far as I'm concerned, I'll be doing work tonight on the IBB, the QQQ, the relationship that I'm looking at here. What would constitute a formulation, a kind of a re-trigger of a buy signal to buy mode in the IBB? What would it take, and how would it take it, and what would the relationship be? Is the SMA, are the SMHs or the SMH ETF, the semiconductor, is that a significant something that we've got to look at right now? So let's just do the Dow. This is the 43rd month from the 14,198 high of peak F that was made with the doji high in October of 2007, and plummets down to the 64.69 low of March of 2009, goes back to a high of in May of 2011 of 12,876 peak D, 43 months, pulls back to 10,404 in October of 2011, saw us a brand new move, and we are in the 43rd month in leg E. So I will talk about that more this week when I get back for Wednesday. But in the meantime, back at the ranch, monthly chart is not yet showing any signs of weakness. There are hints, but not proper signs. So
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.